Hi, I'm Brent Farley. I'm the managing member of Farley Law. We're a law firm. We help our client financial institutions develop new products and financial services. And along those lines, we're doing a series on what can banks actually do. So last month, we made some notes, comments on some of the basic things that banks do and took a little bit deeper dive into deposits and lendings and primary functions of banks. So this month, we want to dive a little further into some other activities that you may not be aware of that banks can actually participate in. So, the first one of those is insurance agencies. So, a bank can run an insurance agency, whether you're a national bank or a state bank. The format might look a little bit differently depending on where your bank is located and how big your community is. But that's one of the things that your bank can take a look at doing that. You can do that. Um, you can engage directly in that activity. You can act as an insurance agent. You can have employees who act as insurance agents and give quotes and collect premiums and take care of customers throughout the insurance lifecycle. Or you can just refer the insurance out to an insurance broker who will handle the business and collect a referral fee. And the bank can do that directly. You can do that through a bank subsidiary. The bank holding company can have a subsidiary that acts as an insurance agency. There's a lot of caveats built around this. For example, if you are in a place of 5,000, it's going to be a little bit easier for you to act as an insurance agency directly. If you're in a place that's larger than 5,000, depending on which federal circuit you're in, you might have to have a financial subsidiary to offer that activity. But just to be aware, Bank of America did push a case through the courts that let Bank of America act as an insurance agent. And they have a branch in a place of 5,000, and the court seemed to think that that was okay. So, despite some of the caveats and a little bit of gray area and how and where and what the format needs to look like, yes, a bank can act as an insurance agency. That can be a line of business, it can be home, auto, it can be life insurance, it can be other insurance lines. Next thing, this one's kind of exciting in today's world where there's so much focus on technology and development of software. Banks can develop software. So that comes out of the powers of banks to engage in incidental activities to the business of banking. So national banks and state banks are generally authorized to engage in incidental activities. So what that means is if you need software to help you record transactions, or you need software to help with your loan origination or with business intelligence, you can go ahead and develop that. Particularly now, with so much focus on cybersecurity and issues with fraud, there's a lot of need to develop solutions to help avoid ransomware, to increase and better the way that cybersecurity is handled, and to improve the way the industry tackles that issue. So banks can do that. The thing is that the bank, if it's developing that software for the purpose of furthering its business, you can also turn around and license that same service to other banks and financial institutions. You can provide excess capacity to non-banking institutions. And so there's really a lot more opportunity there than what might be apparent for a bank that is set up to handle that sort of business line or that sort of activity. So really good example there. The other thing is that since that sort of software development is an incidental activity to the business of banking, a bank can actually make an investment in another firm that is engaging in those activities. Now, there's some caveats you want to be aware of if you do make an investment, and if you make an investment in another company, that company does need to limit its activities to activities that are acceptable for a bank or financial institution, generally speaking. So something to be aware of, but you can engage the help of third parties and others to help develop solutions for the bank, and you can actually turn around and license those solutions and activities for other financial institutions. Just as an example, a while back I saw Truist go ahead and at least start to try to offer core type processing service to other community banks and financial institutions. So lots of opportunities there, lots of flexibility there. I would expect to see at least some banks take a step in that direction. Next thing, venture capital. Now, this is a little different in that a bank can't engage in venture capital activities directly. but a bank holding company can own a venture capital firm. Now, it's true venture capital. That means you're going to make an investment in an enterprise where the outcome is uncertain. You can take an equity position; it doesn't have to be a loan position, and you can count on capitalizing on that when there is growth in the business, and you sell at the time you desire to exit the company. So, venture capital is a possibility through a bank holding company, and you'll see some of the larger entities and bank holding company families have a venture capital arm. A lot of came into play back when some of the large venture capital firms became troubled and needed the support of TARP funds or other funding. So the government allowed venture capital firms to jump into a bank holding company family to take advantage of some of the capital support that was available through the banking industry infrastructure. Still available. It can still be used. You don't have to be a giant institution to engage in that. You do need to keep your activities safe and sound, though. It needs to be a support for the bank and not a super risky activity that will draw away from the strength of the bank. The last one I want to talk about today is really interesting. There is a provision in Section 4C of the Bank Holding Company Act that allows a bank holding company to make a less than 5% investment in the enterprise. So this is kind of an oddball exception that in most cases, there's a strong division between banking and commerce. That is, banks and bank holding companies generally cannot engage directly in commerce and can't make investments other than loans in commercial enterprises. So this is a big exception. It is available. I think some banks have used it in the past and may still be using it. It needs to make sense for the bank, but that's an interesting exception. You can use it. So why am I going over these things? Hoping to give some more inspiration to our community bank clients. See that aside from just the traditional loans and deposits, there may be some activities that make sense for the bank within its strategic plan that the bank could take on if it was just aware that that was a possibility. So hope you're watching this, hope you enjoyed it, and hope it maybe got your wheels turning to think about some of the other things that a bank might participate in. I'll talk to you next time. Thanks.